Hi, and welcome to the first working day in 2020, a new year and a new decade. My name is Cathy Sabater, and I am a mortgage planner and proud veteran. I wanted to share the forecast for 2020. Here go some of the topics we're going to be discussing. The feds. They've cut the rate three times, but why did they do that when the economy was doing so well? Well, that's one of the reasons why some people thought we are going to have a recession. Because if you continue to make these kind of cuts, it changes the flow of how the economy was going. So when the economy started to slow down, then they cut the rate to keep it stimulated so that it can be on a steady flow. The other thing that was exciting uh, was the Fed started buying mortgage backed securities. Well, as you can see, the trend was and the goal was to taper off investing in mortgage backed securities. But as you can see here, they started buying mortgage backed securities again. So, what does that mean? Well, when they start buying mortgage backed securities, that helps with keeping the interest rates lower. On top of that, we have the Fed committee, and most importantly, they just prefer to have lower rates. So it's going to be interesting to see how they utilize their decision making to assist us with that. So, what does this China deal mean to us? Well, it means a great deal because anytime there's a tweet, as you know, that's how communication is nowadays, it definitely affected the stock market. So, when the stock market goes up, mortgage backed security, mortgage rates usually tend to go up. So, it's almost like a seesaw that they work together. And since this is an election year, it's going to be interesting to see what's going to happen, right? We've had this momentum for the economy. Should we have a change in presidency, then that flow is going to change. And then what's going to happen to the trade talks that are happening and the momentum once they switch off? Stocks. This is at a high time. We have not seen, I know I haven't seen, that the stocks have increased dramatically. And so when you look at this, when they say, when do you get in and when do you get out? This is indicative of, wow, I'm making a lot of money. So I'm going to stick to it. And of course, get the advice from my financial advisor. When do I get out? When do I get in? And when do I get out? So, with the way the feds are working the economy, stocks are at a high time. Housing. Many of us wanted the economy to slow down, but continue to do what it has to do because we have an affordability concern. And with that being said, although um, there's low inventory, that's one of the reasons why prices continue to go up. Although rates are consistently low for the last 10 plus years. So, what does this mean about low inventory? Well, supply and demand. When there's not a lot of inventory, that is one of the reasons why the prices continue to go up. So, as you can see here in 2006 and 2007, and now those were the high. We remember that time frame in the market. And now, as you can see, how it has tapered down. So, if there's only five houses and 25 people want it, that is where the competitive bid comes in, hence increase in value of homes. Wow, this was an exciting data to get into. And that is, did you know that the oldest millennial will be turning 39 in 2020? So we're hoping that the first time home buyers will increase. Interesting enough to note that as you can see, back in the day, right? Age of marriage and then age of the first birth. So you can see that it has decreased. One of the interesting things that have changed is that, hey, if you're a millennial and you're living at home or living alone, you have a 38% chance of owning a home. But if you're married with two children, then more than likely you're already a homeowner. One of the things in regards to all this data that is being gathered is popularity of Google search. So what they've noticed that if you see the wedding registry and the baby registry, so this is an increase here. And as you can see in 2008, when the market was slumping or slow, whatever word you want to use, and as we've increased as far as the economy is concerned, you can see more people are searching this topic. So the recession. We mentioned the feds, they've reduced the rate twice. They're buying mortgage backed securities. So they are helping keeping the economy steady. Recessions usually happen when unemployment goes up to like 4.5. We're at about 3.5 right now. Um, and so when that does occur, we thought it was going to happen, what, 1 or 2 years ago? We thought it was going to happen in 2020. It's an election year. So more than likely, it may happen in 2021. It just depends. And the reason why it's the longest expansion on record is based on the fact with the feds doing what they're doing to keep the economy going strong. But is it a band aid or is it a real cure for where we're at right now? But manufacturing is struggling, and also the shipments have declined, right? So the way of life that we have has changed dramatically. So it'll be interesting to see if we're going to have the recession in 2021. We'll keep you posted. This is when we're talking about the unemployment. Once this reaches up to 4.5, then more than likely we'll see what's happening right now. It's 3.5. If you look at all these peaks, these are historic records of the recessions that we've had. So, what's happening with the rates? We just talked about that briefly. Mentioned the seesaw that you can see right here, right? So, any other questions that you may have, feel free to give me a call. I'll be more than happy to discuss it with you. And let's talk about the government bonds, right? So, how do we gather more money into the economy if we're investing millions of dollars in buying mortgage backed securities? Well, then we have to sell things. And as you can see, our rate of return is pretty high considering all the other countries. Now that this is a global market, it does affect it. With this, that being said, we still have a chance of rates perhaps going lower, but we'll find out what the market bears as we move to the next. As far as we're concerned, as mortgage planners, as advisors, is that technology has changed a great deal. So we have a lot more people shopping online. We have medical breakthroughs, which means people live longer. And our job as mortgage planners is really to assist you with wealth creation. So if you're renting, rent, we definitely want to help each renter own. We'll help you develop a plan. And for those of you who already own a home, which category do you fit in that, fall under? Because we have people who have rates over 5, 4.5, and 4.0. So would you refinance? Well, the cost of refinancing versus the cost of saving money, debt consolidation, and things like that, that's what I do as a mortgage planner. So if you have any other questions or concerns, please let me know. But there's also some more changes that has also occurred. With the fact of the cost of living, we have a new FHA loan limit. What does that mean? That means it has increased to 765,000. Wow, that's a lot of money. And then that's an FHA loan. And a conventional loan, the conforming limit has increased all the way up to 510. This is a little more complex to contend with in a short video, but if you have any questions or concerns, please again call me 619-846-2675. And the biggest change with the VA has to do with they removed the VA loan cap. So some of my clients from back in the day, we didn't have that. So they put some checks and balances in place in order to protect the VA, because the purpose of having the zero down is the VA is actually guaranteeing 25% down. So what did they do? Well, this one is that's part of what they did. That removed the cap. So if you wanted to purchase a home at $1 million, before you would have to come in with 128,000 as a veteran. As of now, January 2020, it's $1 million and you don't have to put any money down. All you have to do is qualify for the loan. So yes, the maximum purchase price versus the maximum loan amount for a VA is 1.5 million. I look forward to your call and your feedback in regards to what you think is happening or going to happen in our new decade of 2020. Again, this is Cathy Sabater. I'm a mortgage planner and proud veteran.